This is Dan, and we have no official new credit spread trade recommendations this week, so I just wanted to kind of do an educational video to show you our process that we go through in coming up with these trade ideas for you. And let me just show you this first. This is the Master Trader website under Resources tab. We've been posting our past MT Live shows. And on December 26th of last year, we did one, how to create a trading checklist and its importance. So that's what I'm going to kind of go over with you just in a nutshell right now. What do we do to come up with these trade ideas? Number one, we have to have a compelling bullish or bearish pattern on multiple time frames, timed with the broader markets and the sector, showing relative strength or weakness. And then we make sure there's no earnings or other huge news pending event, because we aren't gamblers. We don't like holding over those events. And then on a put spread, we sell credit spreads under support, credit spreads over resistance, and we want to make sure the premium is a good enough credit for the risk that we're perceiving in selling these options. So let's go through a couple of them right now. Here's spiders. So down here at the bottom, it was just a no-brainer, fantastic time to sell out of the money put spreads, as we've been advertising with the cooked internals. We had a red bar ignored here, and then every attempt for the bears to kind of get a reversal has failed. So as of right now, the bulls are still in control. We've been day trading, both for our advisory letter subscribers and the folks in the green trading room, but we're selling credit spreads in here, and we like doing them, obviously 10 days or less, but the fewer the days, the better. We've given a few recommendations on expiration day, and one of our favorite ones is the spiders because of the multiple expirations throughout the week, Monday, Wednesday, Friday, and Thursday on the monthlies and quarterlies. Let's continue here. So the ES right now, it's 1 p.m. Eastern on January 21. The futures are down 7.25. They were down more earlier, but does that give us a bearish bias? No, not yet. I mean, there's been so many other gap downs and morning weakness. Every one of them was negated. So we still have a neutral to bullish bias for the remaining week until we get the wrong way option traders sentiment to give us that bearish turn, and then the internals do its job. The McClellan oscillator is already overbought, and then we just go down to the daily time frame to find our entries, and then we will be selling a bunch of bear call credit spreads. So the dailies here on the bottom left, weekly on the right is a sell setup at crack. It's in a downtrend. The monthly chart is in a downtrend. We have lower lows, lower highs now. So the Master Trader method says short on the daily chart when we get it. So we're always watching spiders on expiration days to sell naked or spreads, because then we don't have any overnight gap risk. They expire the day we put them on. Under Friday's low, we can sell an out of the money naked call or call spread. So I will be keeping an eye on that. And I looked at the premiums though, and the entry is under a prior day's low. So that's under $263. The high of the day was right there at 267. So we'd be selling at 267 naked calls or call spread. And then we just got to make sure that the credit that we receive is adequate. I'm just going to go through a bunch of them here in no particular order. These are some bullish trades that I have on my watch list. Bottoming pattern here, DSKE. Now let me continue to go through my checklist. DSKE, it only has monthlies. So that's a veto right there, because we only sell them 10 days or less. But number two, they don't have even dollar amount puts. So the out of the money 2.5s, 0 by 5 cents. We would never sell a in the money, deep in the money call. We're getting no premium for it. So that's a veto. PNC, bank, beautiful close on Friday. And it had earnings here on this bottoming tail day. So it started out really weak, close strong. So this would be a beautiful, beautiful candidate if we get enough juice and there's no earnings. So let's continue our checklist. The low of this bar is 117. Now I go to my quote screen, PNC, 4 days to expiration, and what am I going to get paid for the 117s? Nothing. 0 by 11 cents. Move on. And this is what Greg refers to as our factory work of trying to come up with compelling patterns. And I'm obviously not showing you my scanning of different setups on Telechart 2000, but that's the presumption that that these are the ones I found that I'm going through with you right now. Triple L, the low of this bar, 174.53. Triple L, nope, 25 days to expiration. No good. But would I do this, since that's a good pattern, let's continue to talk about it. Would I give, because I do the same thing for our Market Edge advisory letter, because they don't have a limitation of 10 days or less. We do whatever we want in there, but typically they're 30 days or less is the sweet spot. So here's a couple other vetoes though. Look at these spreads, preposterous. This is what you do not want to trade. 5 cents by 310? Grow up. The out of the money ones here, 75 by 380, you're a veto. CPRI, all right, this looks good. Bottoming pattern, it got above the 20, and we have a higher high, higher low. So let's continue my factory work. The low here is 40.16. Now, see what we can get paid. The 40s, 0 by 15. There's no juice. And when I say I'm wanting juice, my rough rule of thumb is if I'm selling them naked, I like getting like 1% of the strike price. So 1% of $40 is 40 cents. That's 1%, right? 0 by 15. That is nowhere near my 40 cents. And then when I sell spreads, my rough rule of thumb is I'm looking for 10% of the spread width. So if it's $5 wide, I want at least 50 cents. Here's another great one, AOS. The low of this bar, 45.40. AOS. Nope, veto, 25 days. But would I do that in our other letter? Let's check. I got to make sure it doesn't have earnings. Earnings, as you see here on Telechart, January 29. That's a veto. I can't do it. I'm not selling these into earnings. But hypothetically, just to show you, let's see if this meets my 10% test for juice. And it does. The 40 out of the money 45.40 put spread, the midpoint TOS here, TOS platform just logs up the midpoint. It's 55 cents and $5 wide. I'm wanting at least 50, but we don't hold over earnings. If it was not earnings, that trade would be in our advisory letter. URI, the low of this little pivot, 114.60. Continuing my factory work. 4 days, good. So that's a start. Now I keep my fingers crossed, and there's juice is fantastic. So you know what? The first thing that is jumping out at my mind is too good to be true. Therefore, there's a 99% chance that it has earnings. Come here and I check. URI, it has earnings in this coming Wednesday. That's a veto. But I'm still going to keep an eye on these, again, for our Market Edge advisory letter for directional day trades and or swing trades. If it's a compelling pattern, the market's still strong. Some of these that have earnings, we might get a nice pre-earnings run. So I urge you all to check out if you aren't a subscriber already. We charge $7 for a 21-day no-brainer trial, and that's where you get a very detailed market analysis. We give directional plays, income trades. We trade everything in there. So that's a fantastic product. And so, I could go through a few more of these real quick. I've already done the homework, JEC. I'm not going to even continue because I think you have a pretty darn good feel of what we're doing here. The reason that's not in the weekly advisory letter, it's one of two reasons, or one of three reasons. It doesn't have weeklies, there's not enough juice, or it has earnings. Double bottom here on CVS, same reason. There's not enough juice. Double bottom WDC, but it has earnings in a day or two. Mighty Mo, insufficient juice. AMD, insufficient juice. Send, Twilio, it's one of these reasons. XOP, just as a little side note, we are going to trade this long in our advisory letter, just as a little swing trade. Bullish consolidation here. The weekly's a sell setup, but oil's been strong. I did check, and there was insufficient juice. There was only 11 cents for the out of the money 30/50s here, and 11 cents doesn't meet my rough 1% rule. It's not worth the risk. It's not juicy enough. So that I hope you find that very helpful. And let me just show you this to our master trader, spread trader. And that's this course, this gold is our mastery course, mastering advanced credit spreads. And what I just went through with you is what this course teaches you how to do. It is phenomenal. It's 12 detailed modules. It took me over a year to make this course, and I'm very proud of it. We've gotten hundreds of amazing testimonials, how it's really changed people's lives. On this, when you come to this page, left click it, because it gives you a module description, and you can read everything that you are going to learn in this course. And this is what we do behind the scenes to bring you these trade recommendations. But if you want to learn how to fish, as the saying goes, then you really owe it to yourself to take this course. That's it for now. I hope everyone had a great long weekend. We're going to remain, very cautious, as I said, focusing more on the shortest possible term credit spreads until we get that bearish reversal, and then we will be picking up the pace on the bear call credit spread side. As always, feel free to email me, Dan@mastertrader.com, Greg@mastertrader.com, and good trading, everyone.